welcome back to the channel. It's a cold one out there. Um,
For those that live in
Listen.
the widely affected areas.
yeah, if you live in the US, you're probably freezing your arse off right now.
And I'm pretty sure there's people south of the Mason, firmly south of the Mason-Dixon line, or in like Nevada, New Mexico, probably doing all right.
Oh yeah, they're probably all right. They're probably
Yeah,
all right.
probably doing all right. Yeah, probably laughing.
How are you doing, Bacon? How are you holding up? Is it stupid cold there as well?
Yep.
Wherever you are located?
Sub-zero is
Yeah.
gotta love it.
Yeah, that's rough, man. Like,
Yeah.
we were looking at going skiing different places, and I was like, -20. Yeah, I don't think so. I don't think I'm going to be doing that. And the place we were actually looking at, it turned from a weekend trip into maybe a day trip. And the place we were going to go to today, it's over a pass, and the pass was like chains required. And I was up at like 5 a.m. checking the weather, and it was like chains still required. And the temperature at the time was -32. And I was like, I don't know if I want to have to be outside putting chains on a vehicle when it's -32 and like an ice rink. So we just kind of we decided, you know what, maybe not the best idea today. So bummer. It was a bummer because it looked really, really nice out there. But you know what? We'll have to make it up next week.
I count myself lucky because like the apartment that I live in, no power outage, but like just driving, it was like, oh look, there's the nearest grocery store. Oh, there's a down power line, and yeah, like I live not too far away from my parent, or my mom rather, and yeah, like she had a power outage, so I swung over there, like
I'm actually surprised. I'm surprised that we haven't had one. Just because we're in tons and tons and tons of trees, and when you ever get like cold weather and snow, you get stuff freezing, and usually stuff breaks. So if I randomly disappear, maybe that's it. Maybe I lost power. Maybe that's what happened. But yeah, man, it's been a wild couple days weather-wise. So, and I figured, you know what? It is Stone Cold Investors. So what else to do?
Live up to the name.
Do a literal Stone Cold live stream, right?
How did the name come about, anyways? Like,
so the name came about from essentially it's kind of the I don't know. I would say the philosophy of removing as much emotional bias or decisions from your investment philosophy.
Alrighty.
And that can like be taken from multiple aspects, right? Like for a long time, I was just doing index fund investing, right? But still, market goes down 20, 30, 40%. If you paper hand, right? If you worry and sell out of that time, then you're really locking in those losses. And yeah, it's kind of revolved around trying to limit kind of psychological emotion-based decisions and investing. So and which kind of goes in hand with like the whole trash panda thing, because a lot of times like opportunities come from sentiment or people being overly reactive to certain situations.
Right? I was hoping that it was going to be a reference to Stone Cold Steve Austin, because one of his fun lines is
it's not. Oh, the other thing that at the time when I was thinking about it, I was like, that's really fitting, is that this is gonna be bad, but there was an article released from Fidelity that said like the top 5% of their individual investor performers were dead. So they were literally stone cold. So I was like, hey, like if you can invest like you're dead and just never do anything, never sell anything, or like for me, it's kind of a twofer.
For
It's
me,
kind of a creeper.
part of the reason why I held out hope it was Stone Cold Steve Austin was one of his lines was, "And that's the bottom line because Stone Cold said so." And you know how people like to go with price to sales sometimes as their metric.
Oh yeah,
Yeah,
yeah.
yeah, yeah. Well, bottom line, net income is referred to as bottom line.
Hey, that works too. I mean,
Yeah, yeah.
we'll say
Silly, but
multiple there's multiple aspects. We could oh man.
yeah, yeah,
And
but
and let's see. Let me get my presentation
you know,
up here, but including our ability to not be stupid and not be influenced by emotional decisions. We also have the ability to not do stupid things. So,
there's the intro.
like
I've derailed long
shorting
enough.
like shorting Nvidia. So um so and I mean if you know, you know. And we'll just say from I did a quick calculation on the previous 5 days of Nvidia. And if we know, or the person that we're inferring to here, um if they were actually naked short, which we were assuming they were naked short,
Yep.
300 contracts at 300 strike, December 2025. If that actually was his position and is his position, he would be down. I think I calculated an additional 1.55 million over the last week. So um, yeah. Don't be stupid.
I'm not actively in Nvidia to like clarify, but I am cheering for people on the sidelines because, yeah, yeah, just burn your money on, like, set it on fire. Why not?
Yeah. Yeah, I mean, man,
Yeah.
that's dangerous, bro.
Oh yeah.
But so anyway, we'll get that out of the way quickly. We got the quick Nvidia 5-day chart up an additional
Yeah.
10.46% over the last 5 days.
Yeah.
Which, yeah, if he's holding those contracts down about another 1.55 million.
Yep.
So, I mean, oh man. So, Jesus. It's so crazy. It's
What
like a
I would love
it's like $1 million every 30 bucks the price goes up.
what
Something
I would
something like that.
love is because he's selling them, he's hoping also that not only does the price do what he needs, but he also needs volatility or implied volatility to go the way he needs. And I hope
Yeah.
that, like, even if the price goes the way he wants, I need volatility to like
Oh,
completely
to go
screw
up.
him over. Yeah, because
Like it drops $100 and is
like at
he
that point,
loses more because the IV goes up so much.
yeah, because at that point, like, buying the put would have definitely been not only the safer way, but
Oh man. Oh
yeah.
man.
Oh yeah.
What
Yeah.
what a crazy. But nah, no, all things aside. Just kidding. Just kidding. I hope he doesn't lose his shirt. Um maybe. I don't know.
Well, what's the worst that can happen? He gets margin called. Oh wait,
Yeah, it already happened. But
yeah, he
yeah,
doesn't
man,
have an
I don't know.
emergency fund.
It's
He's got a margin call fund.
have you heard of anything interesting happening the last week? I know there's a couple things that have happened, like you know, planes just randomly losing doors, or not even
Oh,
doors,
we're going
panels.
there.
That was that
We're
was
going there.
fun.
A
That was
company that
fun,
rhymes with
right?
Boeing. Yeah, this company,
Bah.
I swear, like, they they situated themselves in such a great way. Like, you look at their market cap. How many hundreds of billions is it? Like, it's, oh yeah, yeah, yeah. So it crossed over the 100 billion mark, like, easily.
130.
It's, yeah, yeah. Like, it's a company that, like, has size, scale in the civilian, like, plane manufacturing market. What only real competitor is Airbus, like, just civilian market wise, and they just keep doing really bad stuff. And
Yeah.
bruh,
Dude, it it's hard because it's like one of those where it's like you just don't have to F up. Just
yeah,
don't F up.
yeah,
And then it's like, you effed up.
yeah.
Like over and over again, man. It's crazy.
This this and manufacturing is a space where, like, if people own up to their mistakes, it is possible where the shareholders, either short term or longer term, like, actually reward them. I don't have the exact numbers or like references offhand, but like there have been like car manufacturers also that have done shady stuff like this, and their prices rightfully been plummeted, and market caps have been slashed massively. So it's, you know,
Yeah.
is what it is.
Yeah. 32. Okay, so
Yeah.
how much? That's interesting because it looks like they really loaded up on debt in 2020. I'm guessing cheap interest rates. Like, what did they do with that capital? Interesting.
SG and A.
Huh. Man, that's crazy. It's definitely not helping their income at all. Jeez.
Yeah.
That's rough. I don't know, man. It just seems like it's one bad thing after another for Boeing, man. It's just it's
Yep.
it's rough.
It's they practically have set themselves up for one of the most powerful moats, arguably, like out there that you could get from a regulatory perspective, and yet they still insist upon, making the headlines for all the wrong reasons. And it's it's a company where, like, in theory, like, you'd say, oh, large market cap, it might be safe. Not so fast.
Yeah. Well, hey, Moxie, if you have owned Nvidia for 3 years, you're probably doing very, very, very well for yourself. So
Golf clap.
congratulations there. Let's see. Yeah, that's great. Man, I'm still kicking myself for not grabbing someone who went down. Just because, like, if I could have put the docs together. Like they were right there. So it's very complimentary play to what I was looking at with ANET. But oh man, yeah, Nvidia's just been a beast, man. I really not like would not be shocked if this went to 700-800. Like, it wouldn't shock me. I also wouldn't be shocked if it went to 300. You know what I mean? But like, I
also
feel like
possible, sure, yeah. But
it's gonna, like, right now, my feeling is that, like, it might take a little bit more time for this cycle to trip, for the kind of AI intensive capex super cycle to trip. So maybe they have another couple, like 2 years in them, or a year in them. But yeah, it's definitely a scary one, just with the how much potential cyclicality could come from whenever that pulls back. Could, like, dare I say, we could see, probably not this drastic, but how drastic the end phase cycle kicked, right?
Oh, for Nvidia.
Yeah. Which Nvidia is going to be obviously a lot more, like, durable, since it's mostly going to be like large enterprise base, and they're going to have like more sustainable demand long term, most likely, until they start taking, I don't know, like, customers start making their own ASICs. But like, I think they could potentially have more tailwinds, but man, the cyclicality could definitely, once it normalizes, I think it'll be like the normalization. I don't think the pullback will be as drastic, but the normalization, I think, could really, like, freak people out, because it will normalize eventually.
I can't remember the high-powered lady that Med Faber had on his podcast. Like, it was sometime last year. I want to say Q2, maybe Q3, where they seemed like they were, they were a little cautious that AI chip bubble maybe is here. That being said, though, long term, though, they think that a possible froth is warranted or understandable, and this leads me to wonder if Nvidia were to, say, drop in share price. I don't necessarily seeing it bottoming out for too long, necessarily. Just based off of, like, assuming that talking heads are willing to put their money where their mouth is, assuming that, and it's not like, some sort of farce, because any number of things could be true.
I think if it does go into a more longer term pullback, let's say like 1 year to 18 months or something like that, where it has like this slow decline, it's most likely going to be where, they revise, or they guide flat, or like they revised guidance like downward, something like that. And it's like, oh, well, we're still looking solid. And then like another quarter comes through and they're like, oh, yeah, like most of our customers are built out now. And like we're entering a normalized cycle, and they have multiple quarters of like revisions of slowdown. But I don't know. We'll see. Dan, no, I am not going to buy Boeing. Sorry, man.
Are you gonna short it with naked calls and just sell them?
No. No. I'm not buying Boeing. I think it is interesting. Like, I mean, just how much like negativity is around it, but a lot of times there's a lot of negativity around companies for very valid reasons, and they're not going to recover. Like, it's yeah.
It's like a lot of the big tobacco companies. Like I have a bit of a value bias, but like they're cheap for a reason.
Yeah, exactly. And yeah, that's kind of the issue that I have with BTI and like, tobacco companies. Like, I just don't see a long-term, I just see long-term like headwinds for them. It's not something I really want to be involved in.
Are you saying you actually do care about growth some?
Yeah, pretty much. Because I really feel like in that industry now, it's like, I don't know, is it just a slow death of tobacco? I don't know. I mean, but that's not to say like maybe it's a slow death, but it's like a 50-year death, and there's tons of capital that they can return to shareholders in that time, and it can be a really good investment, right? Could so be, you just don't know. So, but yeah, I'm not gonna play with that at all.
I'm just concerned that like governments and regulators would treat it like a piggy bank.
Yeah.
And view it as a punching bag, and you as a shareholder just get screwed over. That's fundamentally why I'm out. Maybe that's not fundamental.
And for that reason, I'm out.
Yeah.
Oh man, let's see. Oh, I wonder if I can get him to join.
Oh, big pharma show. Sorry.
Oh my gosh.
Yeah. South Park references have been made for people behind the scenes over at Capital Mindset Discord. That's now you know. Oh, yay! It seems like you'll have a far better counterparty as this live stream goes on.
Oh, really?
Oh yeah.
Sweet. Okay, we might get him. Yes. Cool.
Yes, let's go.
I might save some of the stuff then for if he pops on, because something I was going to talk about is Paylocity, because I took a stab at that one this last week. So
I thought that you guys were going to also talk about like Crown Castle, American Tower, and Digital Bridge.
I don't know. Maybe me and him have been going back and forth about it, and if he jumps on, I think we will. I think we'll talk about Crown Castle, AMT, the industry in general. Just because I think we have some pretty possibly opposing opinions on it, which can be good. Like it's all in,
Chat,
good fun and games, right?
I want you to understand that these people, I'm not with these people necessarily and everything, because they're of the belief that Uber having no cars and Airbnb having no hotels is a thing. Maybe not necessarily investable worthy at the wrong price, but they also will say Digital Bridge and they own no bridges. Crown Castle and they own no crowns or castles.
Castles, what?
American
Tower, and they're hardly even American. Yeah, they're hardly even American.
New economy. We live in a society.
It's like just the fleece over the eyes.
Yeah, we've been hoodwinked and bamboozled.
Oh man.
Yeah.
No, but Paylocity got back down into about the $150 range, and I was like, you know what? It's time. It's time to take a stab. So
we have not been Spackledorfed. For those that know,
Spackledorfed.
Yeah, that's Big Pharma Show. I think will know the reference.
Okay. So some of these things just go over my head, man. I'm
No. This is me being dumb, like deliberately dumb. Yeah. So Paylocity, no Paycom.
I've got Paycom already.
Oh, okay, you're happy with your Paycom?
Yeah, I started loading into Paycom when it went down 40% in a day.
Rolling with both.
Yeah, unfortunately, like with Paycom, I didn't have as much conviction right away. Didn't have as much conviction right away in Paycom when I actually like first bought it, so I didn't load up as much as I would have liked to when Paycom was in the like 140s, 150s. But I did start like staggering into it, and I think my cost basis now is like 170 or something like that. Because I built it out a bit more, but now I've switched over to Paylocity.
There he is,
Andrew.
How's it going?
Yield max.
Wait, hold on, Andrew. You're over in New Mexico. Why do you, or not the Ducks, southwest of America? What?
Oh.
What's in your mug?
Just give him the address.
Yeah.
Wait,
what's in your mug?
Coffee?
Why do you need coffee? It's warm over there.
Bro, I don't know if you know this about coffee, people. You don't just drink it because it's warm.
I don't care. It could be like 120 out, and we're like, I would like coffee,
It's
but
120
iced.
out here.
You are
still drinking.
You are the worst shareholder of Monster ever. Substitute goods.
Yeah, well, actually, I'm a good shareholder because I'll live past 40 because I don't drink it all the time.
That is fair.
Oh,
I do drink it occasionally, though. Not Monster. I drink Rain.
Oh,
Dude,
okay.
Rain's coming out, by the way, with a flavor. It's like trolley gummy worms.
Oh, really?
Oh my god,
dude! I'm so excited for that flavor. Actually,
you don't understand.
That
Andrew,
sounds so nasty.
Mr.
No, it sounds
Beast
so good.
and Logan Paul are going to destroy you, and if you don't get destroyed by that, it's going to be GLP-1s.
No, I'm so excited actually for this trolley gummy worm, and like they already have like the what do you call it, the sales, like the people that are in the sales channels, the sales samples out, and those people say it's like their favorite flavor of Rain.
Oh,
so we'll see.
Well.
Remember, like a lot of times they're really good at replicating flavors. Like orange dreamsicle sounds gross until you taste it, and you're like, "Oh my gosh, it tastes like orange."
I can see how it would work out as a fat person.
White gummy bear. It's another good flavor.
Yeah, like I can see how it would work out.
Yeah, I don't know.
Speaking of fat people, I did turn off. I was listening to the Caleb Hammer. He just got on.
You gotta go there.
No. He was talking about Boogie. I don't think he's talking about Boogie.
Laying down the hammer on Caleb Hammer. Okay.
No. It wasn't. I was gonna say Caleb Hammer was on the Iced Coffee Hour talking about the Boogie. That's what I was listening to before this.
Okay.
No.
All I heard was, speaking of fat people, Caleb Hammer.
No. I'm not talking about Caleb. No, like I'm talking about
shots.
Boogie. I don't think it's controversial in the least to say that he's overweight.
A large individual.
Yeah.
He's husky.
He's husky.
Big boned.
Indeed. We're talking about Paycom here?
Yeah,
Paycom, we were talking about it because I was just talking about how I picked up some Paylocity this week.
Okay,
and then he was like, no Paycom. He was like, no Paycom, and I was like, no, I actually already bought my Paycom. So
can we pause for a second, because I know this is all like off of an API. I love whatever software you're using pulled the competitors.
Yes,
Datadog, the competitor to the Paycom.
I know.
Oh yeah,
right. Yeah. It's so dumb. I think it's almost like a instead of a competitor, I think it's more of like a stock sector analysis or something like that. It's totally off. Sometimes there will be like two actual competitors, but it is very, very like
the only one I see in here that's a competitor is Workday.
Yeah.
That's about it.
Yeah, I put that in there just because I saw it was available, and then like I pretty much never look at it because it's almost never correct.
Yeah. I like how Paylocity isn't in there.
Yeah,
I know.
ADP.
I know ADP Paylocity.
Yeah, this is like where I like go on a crusade. Like every live stream, I like rant to chat like, someone please make an aggregator that does an actual good job with competitors.
Yeah, because TTD is the trade desk, right?
Mm-hmm.
Yeah.
Like, what does that?
Our service now, which is
Yeah.
like isn't that like a cloud service like ticket? Like, don't they like
Yeah,
it's ticket monitoring?
ticketing
Yeah.
management or something like that portal.
Yeah.
No, Snow. I mean, come on, Snow is definite, obvious competitor.
The only one I can kind of see is maybe Dan's comment. we say that when people are like saying there's people that say they're retiring on yield max, and I'm like, you're not retiring, you're just taking a break,
Taking a
from working.
pause. Dude, but okay, seriously though, that's so sad though, because they're like in their mind they really think that they're gonna be able to do that, and then they're gonna get wrecked.
Well,
And
so
you'll be like, oh, all my capital's gone. Crap.
Right.
I have to go back to work. I'm screwed. Oh no.
yeah,
I've
and then
depleted
your
my retirement.
exactly. Then the retirement that you've been saving up, that you're now like, let's say you're 40 years old, now you don't have the compounding to work with. You're just like,
Yeah.
oh,
Well, and what's never really like, I don't know, what I never have really got is that typically, you know, capital appreciation is way more, I would say, tax efficient than a capital distribution, because you can just like hang on to those capital gains and then structure like your income and how much long-term capital gains you take, and you're paying way less taxes on it, at least from the scenarios I've run through, where it's like you're forced to take distributions, like you have no flexibility, no control over it.
I think the other thing is, I think yield max is an unqualified dividend.
Yeah, so you're double host, right?
Yeah. Yeah.
You're like, you don't even get like, it's not even treated as a capital gain, right? It's just treated as ordinary income.
Mm-hmm.
Yeah, so you're really hosed.
Oh, but if they don't make any money, then you know it's okay because we have tax brackets, guys.
Yeah. What do you think the next trend is going to be? Because we went from growth, right? Growth and hype in crypto, and then we kind of went into dividend and dividend growth and yield max. I wonder, like, I don't know.
Hybrid.
I wonder what the next one's going to be.
Hybrid. Crypto growth yield max.
Crypto yield
ETF.
Max.
Yeah.
They already did that though.
Boom.
They already did that.
Where they're just gonna, all they do with yield max, you're saying, or like the people invest in yield max?
No, I meant just like retail in general stuff. You know, like I wonder what the next hype, what the next like, I don't know, hype thing is going to be. I watch them do all of this, and in like 5 years, everybody's going to be like, "Oh, guys, just buy the SPY."
I think the answer, by the way, to your question is, let's see what happens in these next 5 months, and then I'll give you an answer. Like, okay. Basically, whatever works the first half of this year, that'll just get shilled to retail.
Okay.
Yeah,
for the back half of the year.
So you're saying REITs are going?
Real estate.
Is that what you're saying?
Yes.
Real estate.
I mean, it could be because, well, the thing is that REITs are dividends.
REITs, utility. I'm trying to think. REITs or utility. Energy is coming off a pretty weak year.
REIT max.
It's gonna be. I don't know. It's gonna be one of those. Like, maybe.
You don't think it could be gold or something, huh?
Gold has already had its run up.
I think, yeah, gold's already had its run, but I mean, it could potentially, like, maybe it breaks. Maybe it breaks highs and starts really trending.
It's possible, but gold has a notorious habit of like going up and then drifting downward, and then
I mean, it's
and you go up, and then repeat.
Like, it's finally holding above previous highs from 2011.
Yeah.
So maybe gold and silver start trending, break out and start trending, and people start freaking out.
Yeah, and I think if you can if you can phrase it as like something that's easy and will make you a lot of money quickly, you can sell that to retail. Like, what I've noticed, things that work, not that like any of us do this because I think it's crappy, but like the whole PayPal thing, it's like, oh, it's an easy double from here, whatever that means. and it's very easy to like show people like, oh, like I can easily double my money. Oh, that's cool. Or like all these like guys that are coming out with crypto now that crypto had like a run up at the end of 23, like not just Bitcoin but the other ones. It's like, oh, you can easily retire on like altcoins if you buy now. By the end of 25, you'll just be retired. So I think that's the other thing is like sell a dream. That's always
chasing
been
tulips. Chasing tulips.
Well, I'm just saying, I mean, I'm not even getting into the debate on that, but like what I'm saying is the things that work is if you can sell dreams.
Yep.
I'm going to sell you an easy life.
Sell you a course.
Sell dreams, and then if it goes well enough, then FOMO kicks in and you get that stupid push.
It helps
but yes,
if you have a lot of money,
like button, guys.
which usually is unrelated to your actual investing performance, that you can show people that you have a lot of money.
Oh, like selling a business?
Yes.
Selling business and like, I got millions of dollars, guys. I'm gonna buy whatever.
Yeah, that individual, by the way,
coin.
they're already selling out of, I think, their yield max funds.
Well, it's smart because they can tax loss harvest, right? You can't even do that on crypto, can you? Can you?
Well, they're primarily investing through grayscale funds, so I think they can. I don't know.
Okay.
No.
And
I don't know.
But anyways,
back to things that are more
pivot back. Pivot back.
Yeah.
No, I got like a small, like I think 2% position paid out, built out in Paycom, and then it bounced back so quick that I like didn't build it out more as I was doing more research. But then like, dude, Paylocity has remained kind of like weak, compared to Paycom.
I said this. The difference I think is just one has a, and I could be wrong on this because I'm just talking about the dynamic. I think I could be wrong. I think it's less that it's someone like big funds buying it, although that could be the case. I think it's also just a factor of it has an underlying bid from the S&P 500 inclusion. Could be wrong on that. But that's one of my thoughts.
When does that inclusion take place?
No. Paycom's already in the S&P 500.
Oh, it already is.
Yeah. Paylocity is not.
So what I've seen before is that the S&P 500 bid usually comes like it's front run into the inclusion, and then after it's included, then it kind of like dives off a bit because all the accumulation's already happened.
I guess my point is Paycom's been in the S&P 500 for a long time. And so like they get an underlying bid from just getting that bid by
overall
S&P
market.
500, like as the market goes up, they could. I could be wrong. People could also be saying, "Hey," I mean, they could be doing the same math you're doing and saying, "Wait a minute, this is too cheap." They could have done that same math, because, I mean, especially now in retrospect, it's pretty damn good math by you. But
dang, I should have just gone like. I should have just taken a nice position there, but oh well.
Too bad you can't just bottom tick the intraday lows like certain people.
I know. I should just start doing that. But no, like I think like I'm at the point now where I'm like, all right, well, like Paycom's kind of run away or is starting to run away, and like I have this. I need to work on this, but I have an issue with averaging up too much. Especially when I'm like, oh, dude, I was right, and I could have gone that price. But I feel like Paylocity is starting to get into a way more attractive zone, relatively speaking, between Paylocity and Paycom. Especially if Paylocity kind of like, trickles down a little bit, maybe it makes like one more lower low. The 120s, 130s. I feel like that's a pretty sweet spot.
They are. Wait.
Just believe in Betty.
Yeah, just believe in Betty, guys.
Yeah, place your bets on Betty.
Oh, we're looking at Pay. I'm pulling up. I was about to say sell side is way under on Paylocity. Bro, these sell side estimates on Paylocity I think are low. I'm biased, but
Yeah.
They
Well, I
guided
mean, what's sell side versus guidance is right around 18, 19, isn't it?
percent growth.
Yeah.
I don't think so. I thought they were guiding for. Hold on. They
I
had
might
it
be
in their,
thinking. I
they
might be
had,
thinking of a different company. You look at so many companies and numbers get
Let me
mixed
see.
up.
Did they give a good or any sort of explanation for that, Andrew?
So I mean, I just pulled up their estimates right here. I'm just trying to pull up what management said in their most recent.
Yeah. So this is what I remember. I'm just looking at the headlines, but guidance suggesting a growth rate slightly below the 20% target they previously set.
Let's see, business outlook. So I guess the question for me on Paylocity for 2024, so for 6/30/24 year ending, the sell side has them at roughly midpoint of management. The bigger difference is I'd have to pull up the exact commentary from management, but they said and I think that management might be a little too rosy, but I think that the sell side has them falling off in year-over-year change too fast, like going forward from there. So their estimates for 2025 is only 17%. Then it's 16. So
Gotcha. Because management, I think, and how I'm interpreting and how I'm thinking about this is that, Paylocity is probably going to see a little bit of top line headwinds from lowering interest rates, and then after they get through that, they're probably going to resume at around 20.
So when do you think these cuts are going to happen?
Oh, I was going to ask that actually.
Well, okay, so let's just
there's no doubt that they'll happen at some point.
We've already pulled back on the risk-free rate quite a decent amount. If I remember right, 1 year, 2 year. So we can see the
what's the 1 year at right now?
The 1 year. I'm not sure.
Of course, I asked the one. 3 months is fine. What's the 3 month at?
3 month. Let's do that. Here's the 3 month, the 2 year, and the 10 year. So the 2 year and the 10 year are already front running the 3 month down, right?
Sure.
So what I think potentially happens, but all of theirs are going to be in pretty short term treasuries. I think they're their duration is 3 month or less.
Right.
So, I mean, we'll probably see I think the market is front running the drop of the 3 year to match up with the 2 and 10 eventually. But we probably won't see that reflected. Obviously, we won't see that reflected in their financials until the 3 month actually starts diving down. But the 2 and the 10 are already starting to at least, from a couple months ago, starting to pull back a bit.
Where are they stabilizing?
They're
okay. I was just looking at where they're stabilizing around 4%ish.
10 years at 397, 2 years at around 415, and we're getting closer and closer to those the 2 and the 10 uninverting, right?
Yeah.
So I feel like I wouldn't be surprised this year if we see the 2 and 10 uninvert. We get into a more normalized environment, and then maybe we moderate closer to 3.5. And then they're going to front run the 3 month a little bit, and then that 3 month is going to start coming down. But I think the market's going to be pricing in that drop of the 3 month way ahead of when it actually happens.
Right. Oh, for sure. I'm just saying for them, what I think is going to matter more is when the actual cuts happen, because if they're investing on the 3 month, when the actual cuts happen, but they will happen. It's not a matter if it's a matter of when.
Yeah.
And so but that's why I think when I look at sell side estimates on this seem kind of lazy to me. It's they have them just kind of dropping off steadily. I don't think they're going to have those headwinds for the next 5 years.
No.
I mean, we don't know
No.
what's going to happen in the next 5 years. Who freaking knows? But
If we try and go with a more holistic view, what are these guys' cost structures looking like?
cost structures in what way? Like, what's the
Like as far as
profit
like their operations, yeah. Because if assuming sell side is right, top line gets crushed real bad. Maybe interest rates screw them over. Like, do you think that they'll be able to do some cutting themselves to offset and
So
retain margins?
here's kind of my question is, do you need to worry about cost cutting if you're growing only at 19-20%?
Yeah.
I don't think so.
hmm
Now, do I think that tech companies can be better with their spend?
Sure.
I
Most
mean,
cases, almost
yes.
certainly, yeah. But
So,
Yeah.
It's a balance because it's like, as long as you really believe that the growth is there to be captured, like you want to be aggressive in
Mhm.
capturing that growth and that
Right.
market share, right?
Mhm.
So, and it's the same thing when I look at like, the cybersecurity space is like you want to be aggressive, but you don't want to be overly aggressive. Like you want to be aggressive where like it makes sense to take on potentially that additional risk, but you don't want to like
Yeah.
you don't want to put the company at risk just for the sake of growth, right? So it's
sure.
like it's balancing that fine line and then being able to cut back if you really start to see that growth tank. But I don't know. I have a feeling that the thing that could really screw over Paylocity and Paycom, I think even more than interest rates, is if we get into an macroeconomic environment where the economy is continuing to weaken and spend is continuing to contract. Because how my belief is that these guys are able to most likely increase sell as long as these businesses, small medium enterprises, are more willing to fork over the money to change platforms, right?
Right.
And
sure.
that's not necessarily something you want to do if those SMBs are in a place where they're like, oh, we need to cut on costs, right? Or we need to just we need to go into this like just hibernation mode, right?
Mhm.
That that could get really crazy.
No, for
Because
sure.
if that happens, maybe, we go into like where they're really, really missing those growth targets until the economy picks back up and we see those SMBs more willing to spend on platform changes.
Mhm.
And that's probably worst case scenario, I think.
For sure. So are you saying essentially a recession, right? Or are you saying more of like a drawn out kind of like malaise of an economy that just kind of
I
like
Well, so we've already started to see larger companies go into either freezes or another or more rounds of layoffs and firings, right? And we're already starting to see larger companies go into like this mindset of like, okay, cost control and kind of fortifying like the business.
Sure.
I think if that is the case and if that continues, then it's going to be a way bigger headwind for companies like Paylocity and Paycom to sell platform changes, right? Because that's probably just not where the priority is going to be spend wise.
So no, I mean I guess I should clarify, like, and I don't think people think this is my opinion. I think I've been very publicly saying like these are not the kind of companies that it's like I'm looking at them saying this is an amazing company. No matter what situation's going to happen, they'll be good. No, I mean like the industry is relatively commoditized. Like yes, there's some differentiation, yeah, but like there's only so much you can do with payroll. It's not
Yeah.
it's not Microsoft, Of course, there's only one Microsoft, but like, so I definitely agree that like you hit like some difficult economic times or just business scenarios that aren't great for these guys. You could see some sell-offs. Now, what that will create is an amazing buying opportunity, I think, because I don't think that'll be drawn out for, a super long time. Like I think if that happens, there's gonna be at some point a rebound. Just when is
Yeah.
that rebound?
No, I totally agree, and I think how was I like lost my train of thought because I was messing with numbers, but no, I think it'll be kind of like a lull, and then once we see things pick up, obviously, I think we'll see growth start to resume. But the nice thing about Paylocity, Paycom, and even a lot of like cybersecurity companies that are like really highly valued or high multiples assigned to them, but they have very, very, very like structured, recurring, and stable revenue streams. It's
Right.
not like they have a ton of cyclicality in their sales, right? Their sales is their service, and their service pretty much is a necessity.
Right.
It's required. So the risk with these is not as much as like a cyclical pullback in revenue. It's more of just that slowdown in growth and the market overreacting to the slowdown in growth, which I agree with you, it could be a very, very good buying opportunity at that point in time.
Right. Because like these aren't the kind of companies either that like I foresee having like a existential crisis to their business model. Like they have some bad quarters, maybe the market sells off in them. It's probably more macro related. They'll probably bounce back as the macro picks back up.
I thought of a bullish or bearish thesis, and by thesis I mean not at all. Payroll will be done on the blockchain. That's your hedge. I found your hedge, boys.
There we go.
That's all we
Bitcoin
need.
ETF.
Let's go.
What were your assumptions here?
I'm just messing around.
Okay, because it looked like you said bottom line growth of -13. I was like, well, that's a rough.
That is rough.
No, like so bottom line growth, it takes the 5-year average by default, and the bottom line growth over the last 5 years by default has been 38%. So I'm adjusting -13 going forward.
Oh, okay. All
and
right,
then
so
my
it's
spread, my spread on bottom line growth
Gotcha,
is
gotcha.
25 to 13 in the various scenarios, right?
Right.
With 18.3% being the mean, and then doing free cash flow analysis off of it. So, and while kind of removing a lot of the premium from the current multiple. So, yeah, 8 pillar stock, boys. 8 pillar stock.
That's all you need. Oh wait, he bought?
Yeah, dude.
Ooh,
That's
he put $1 in, and now he's gloating about how he's up like 20%.
No,
he must watch my channel.
No, the percent. Did I tell you this? That's what I was saying. The percent gain that he said he had on it means that with his entire basis, he bottom ticked the intraday low on Paycom on the day of the sell off.
Yeah. Hey, man.
So
that doesn't. I don't know. His MO as of late has been, no, man, I'm just gonna sell cash covered puts and I win no matter what.
Yeah, unless the stock goes up and then you have upside risk. No one talks about upside risk with cash secured puts.
Because there is none.
Did you see the intro, man?
No.
So we started off with the intro, and Paul's theoretical 5-day loss. If he really was short, or if he really was a naked short 300 contracts at 300 strike, which was what I was assuming based off of his premium harvesting assumptions. So 5 days, he's down 1.55 million.
Oh man.
In 5 days.
Painful,
if he is really 300 contracts sold at the 300 strike for December 25, he's losing $1 million every like $33 the stock moves up.
If he doesn't call it an emergency fund, it should be a margin call fund.
Gosh, that's rough.
Yeah, it's pretty bad, man. It's pretty bad.
Yeah, at least in theory, the money should have been separated between him and the other family members. In theory, because it is a new year.
I don't know, man. I feel bad for his brother, dude.
Same here. Same here.
Like, that's rough.
But on Paylocity, I've been nibbling very small amounts.
Yeah.
I feel like the next earnings report, I think it's violently gonna go one way or another in the next earnings report, which probably means it's gonna be flat.
Like, I think it's gonna go up a lot or down a lot, and it's gonna be flat.
Like, my feeling is they're gonna come out and either what they're gonna say is, hey, growth is like either re-accelerating or staying where it was, and that's good. And the market's gonna go, oh, sweet, like everything's rocking and rolling for them. Like, bid this shit up. Or they're gonna come out and be like, yo, growth's like decelerating rapidly. We're very uncertain economic times. Like our guidance, we're gonna cut a little bit, and they'll be like, oh man, sell this thing off. So what they're probably gonna come out and do is like say like something that somehow just has to be like down 2%.
Yeah. Well, the thing that worried me with Paylocity, which like I've been wanting to get it, so when I saw it in the low 150s, I was like, all right, it's probably time. I'm gonna take a small starter position and hope that it gets into like the 120s, 130s. But like the thing that worried me a little bit more with Paylocity compared to Paycom was that their cash on hand held for customers was, I believe, significantly more than Paycom.
Yes.
Like significantly more. So that interest rate headwind we could see that affect Paylocity more than Paycom. And Paylocity is trading at a more rich growth multiple than Paycom. So
Paylocity
I'm like, yeah.
I thought they're like, are you looking at LTM or NTM multiples?
Let's see.
Because I thought they're almost identical. Like they might be
on the NTM.
Yeah.
So Paylocity is 3.22% net income yield. EBIT is 2.45. Paycom is 4.15 to 5.2. Yeah, so they're still trading a decent amount more rich than
Paycom. Okay.
Yeah.
Oh, these are gap. I'm probably looking. I think I'm just factoring out. I'm doing normalized. Okay, that's probably the difference. Because if we look at free cash flow. Okay.
But so I'm kind of worried that like if Paylocity does see more of a headwind from lowering interest rates and they get an additional potentially pullback in growth just from weakening economic outlook, the market could be like, oh shit. I feel like the market already had the oh shit moment with Paycom.
Bro, they've had like 3 oh shit moments. Dude. I don't know. They could have a fourth. I don't know about that.
Very possible, but like you look at Paycom and like that right there was a huge OF moment.
Well, to be fair, like
100, like going from 260 to I think it was like 144. Like that was like a 40% drop in a day.
Management basically came out and said like, we're doing this other kind of like strategy. No,
yeah, I know.
Tell you how we're going to monetize it. Yeah, it's going to be very painful in the short term. Thanks, bye. Like
which is funny because like they had been like leading into that, like they haven't been, maybe they weren't that direct in previous conference calls, but like you kind of knew it was coming. It was like, yeah, like we're building this out, this is gonna be like where we're going, and maybe they just like didn't care about sugarcoating and they're just like, F it, like
yeah, I mean
we're doing it. YOLO.
Really what it comes down to is like I can tell you from talking to Paycom's team and like their management and everything, they are fully all in on Betty.
Oh yeah.
And I think they at the point where they're saying we're making a binary bet on Betty. This is the playbook. We don't really care if you care right now. I think because like remember this is a founder CEO.
Yeah.
Like it's almost like it's Elon Musk for Paycom, right? Like it's the same.
Well,
dynamic.
And I don't know if it was the first time that I really heard this type of talk from him was in this last conference call where he basically said, we're going to cannibalize ourselves and we're fine with that.
Well, actually, I'll explain why that's irrelevant, actually. But before we do that, Fake Alias just finished his CPA exams.
Oh,
As
congratulations,
someone
Fake
who
Alias.
also went through that hellhole, or congratulations.
Bravo.
Congrats, Fake
Bravo.
Alias. Come back. You have been missed.
But on the
Go. Now go look at 8 pillars, okay?
on the I should ask Fake Alias if he took BEC like post the split up. I don't know if he did that, but because they like changed the CPA exam a little bit.
No.
I was curious to see how that went for him. But so I was gonna say, Paycom, the cannibalization had to happen because
Yeah.
nowadays Paylocity, ADP, I can't recall if Paycor was this way as well. They all just do it on a monthly basis. They don't care how many times you run payroll.
Yeah.
So Paycom had to get off this model of charge per payroll run, which is kind of a weird way of doing it. Instead of just saying, hey, we're going to change to just monthly subscriptions instead of like per pay period. But yeah. So I think that's kind of why they did it this way, was they were saying, well, we have to get to a way where you're not running payroll all the time anyways, because no one's going to do this. Like no one is doing this. It's kind of the...
He took BEC before the split up, by the way.
Oh,
yeah.
Okay.
Yeah,
So-
I don't know. It seemed like there were a lot of things that the market could have potentially been reacting to, right?
For sure.
And
none of it.
but yeah, and none of it like, I don't know, none of it immediately good, right? You could look back in 3 years and be like, oh man, they were geniuses, right? It just depends on how it plays out. If it takes as much as they think it's going to take. But I think the day that it dropped, it was pretty much immediate. Like it wasn't like it sold off and then it downtrended through after hours as they were going through the conference call. It was like just down 40%.
I mean, yeah. I mean, to be fair, like I guess there's like this theory, people talk about this kind of stuff, like that could have been a complete wash of all of the people that like were holding from above that point, and now everyone holding it is in the black or in the green, however you want to say
New
it.
money. Yeah.
Right. And so their investor base may have changed, which may be good for you if you're holding it. I don't know. By the way, I was going to bring this up. There could be some potential short-term headwinds, more so to Paylocity than Paycom on the whole interest rate thing. But from me as like a potential investor, I like the company that holds a larger percentage of client funds. Like,
really?
Well, yeah, because they're just getting more interest income.
Yeah, true.
Now the flip side of that, what that implies is that Paycom's a more expensive product. So the more incremental sales they can get, there's good and bad to it. Me personally, if my company gets a larger for every sale they make, they get $10 of income and then $2 of interest income. I like that more than for every sale my company makes, they get $10 of income and $1 of interest income.
Yeah,
I guess that's the way I look at it. So from a business model, I like Paylocity's. Just on that simple item, I like that better for Paylocity.
Yeah,
All else being
but
equal.
like we said though, the vice, like the catch-22 is like, you're able to earn income on that capital, but then you're potentially more subjected to interest rates, right?
Sure.
So you're at a whim of like, if interest rates are going up in a way, like it's really good for you.
So I think that matters from like, if we're
All
looking,
else not being equal.
there's two ways to look at this, is like from a public markets investor sentiment perspective, could be kind of annoying. From a pure, like if I own the business myself, if I own 100% of the business, like sure, I'll take the whims of the interest rate market if that means I get more money. Like but
just don't put it in
100% agree.
Dogecoin, right? Like
what do you say?
Just don't put it in Dogecoin or yield math.
No, I'm gonna
No,
put on Coney.
Coney.
Dear God.
Oh,
But
man. No, I agree. Like, I mean, it's definitely, it's just another lever that's larger for them to extract,
mhm,
income out of their clients, right?
right.
So which is, great, good for them. So we, let's try to pivot. I mean, me and you, we've chatted a little bit between each other about Digital Bridge, CCI,
Uh-huh.
American Tower.
infrastructure, American Tower.
Mhm.
Man, I don't know, how do I want to intro into this? How's Digital Bridge doing?
Do you want to? Well, I guess people
Digital
understand.
Bridge too far.
Yeah, they're still doing good. Nice.
Yeah.
17, 18
For
bucks.
those wondering, no, I did not buy at the top there. That was not my entry point.
That right there. Actually, no, back here. It probably wasn't even Digital Bridge yet. That's when he bought
It's still probably Colony, yeah.
Colony. Yeah, right. Man, this is such an interesting space. Like, I listened to that call, and I really wonder how technical the CFO is, because I'm like, dude, like, to me, it's just so obvious the writing's on the wall. Like, I don't know. Like, I see so many risks associated with like traditional tower right now that I'm just like, I don't know if I'd even want to touch it. Just on the off chance of like, we have a potential like generational, like decade skip of technology in those lower economic countries. Like, it makes me concerned for just pure tower lease plays.
Because this CFO, he worked at American Tower before, right?
And Verizon.
And Verizon, yes.
Yeah. Verizon and American Tower. And American Tower was very, very, like, obviously cell tower focused. And I think that's why they went into international so much, was because the tower demand was going to be more internationally. There was more growth, especially in those areas where you have lower economic status, and then the unit economics of it are better, which there's no question the unit economics of cell tower are better, right? No question. It's just it's going to I don't know, man. It's at risk for being disrupted in a pretty big way, I think.
Well, so it's interesting because small cell tower, that's the 5G, even like 6G, right? That's what small cells are.
So small cell is 5G, and then there's something called tiny cell. So there's going to be, so the direction that just cellular technology is going in general is I think it's higher and higher higher and higher frequencies, which results in greater throughput, lower latency, but lower coverage, right? So you need more amounts of them, essentially. Small cell is really where 5G is, and then apparently there's a development between small cell, which is going to be tiny cell, which is going to be more 6G development. But like, the technical specs that I've seen for some of these, like what they can produce or what they can push through some of these frequencies that are going to eventually be used for 6G, we're talking like over 100 gigabits through the air.
How's the coverage then if the latency and everything else is improved by that much?
So that's where you get into the higher the frequency you go, the worse the coverage is, right? So tiny cell might be more of a I don't know, more of a internal building ISP internet service provider replacement, and we're already seeing with
like a
5G.
Wi-Fi replacement, right? That's what you're saying, essentially?
Yeah. We're already seeing with 5G that, you know, I think T-Mobile has home internet. They're advertising and pushing that out a ton. We're seeing, I think AT&T now has 5G home internet. At the same time, we've got LEO satellite systems, which is just like Starlink, like low Earth orbit, is obviously growing quite a decent amount. But then you also have collaborations between like T-Mobile and SpaceX or Starlink for deploying essentially low band, low Earth orbit cell, not towers, but like cellular like satellites. So instead of servicing off of a tower, you could essentially be serviced off of a satellite. I just like
to be fair, and I don't know that, because the one thing about Digital Bridge is like they can be in all of these fields, so I'm not trying to necessarily pick one.
Oh,
One of the
Yeah.
reasons I kind of like, right? Well, that's literally what you do as a PE company. You're going to have funds that allow someone comes to you and says, "I want to be in small cell." Okay, cool. From a flows perspective, it sounded like he was saying there may be some difficulties in the near term. I don't know, like what I got was him saying, part of it sounded like Crown Castle is having to deal with Elliott Management. I feel sorry for you. Like from an owner, from like a C-suite executive point of view. He was like, I'm sorry.
Yeah.
And then he said, from what it kind of sounded like was there's going to be some near-term headwinds. I don't know.
I mean, there's for sure going to be near-term headwinds for CCI, more related to their tower business, especially until they get that Sprint runoff. But man, for small cell side, like if you want small cell exposure, I don't know. I'm trying to. I wouldn't say that like Digital Bridge is set up better to be a small cell play than CCI.
No, I'm not saying that.
I think they're like, and I'm not just big on like asset managers in general, because you're really just kind of betting on their ability to be super efficient and effective with the capital that they raise and how they like manage the businesses, not directly manage, but manage the overall structure holdings of the companies that they have underneath them. And I'm just not like, I don't know. I'm just not sold that they are going to be able to. Is somebody fighting?
Yeah, in the comments. It's cracking me
Live
up.
Today is the day that keeps on giving. Like, even though I'm a Bears fan and my rival team, won. They dunked on the Cowboys. But yeah, live chat. Oh, not only that though, but yeah, Jeremy Lafifi, he's back. Poor man meet Coven is back.
Did he ever leave?
Yeah, he said that he
like
was
a
going
week.
to take a break. Yeah, he's like 9 days ago uploaded it, and it's like
When he-
1 hour ago upload.
When he said like take a break, I thought he meant like be off for a month.
Yeah.
That's what I thought too, but then I immediately thought to myself, no, that weed bucket is going to run dry. He's going to need to make some top line again.
Yeah. So, but yeah, man, I don't know. Like, from what I see in Crown Castle, I think Elliott Management was probably seeing very similar to what I was saying of how much they could be a cash machine, essentially.
Sure.
Especially as they get through their backlog of small cell contracts. Their fiber plant, the adjacent services that they offer go really, really well with being able to package and sell small cell. And if I think in the cell industry in general, that the majority of growth is going to come from small cell. I don't know if there's a better way to play that.
So
if there is, I want to find it because like, oh man, just the fiber assets that they have, the rate of small cell growth that they're going through, and most of their small cell deployments up until this time haven't been very profitable, right? Because you're building out you're getting the leasing on the initial small cell deployment, and now you have the ability to put another 2, 3, 4 small cells on there. And same thing with tower, it's not going to be profitable at first, but then once you lease out a certain amount of space, your profitability on a per lease basis gets really, really high going forward. And as they continue to get through their backlog, I think their backlog right now is like 60,000 deployments is what they're contracted for. And they, I think, are only now scaling up to about 15,000 deployments a year. So they have like 4 years.
That's a lot of. And how much do they make per small cell?
So that's the thing, is like they
have to on a gross basis, right?
Yeah. Well, oh man, I'll try to find it. They have basically a profitability structure of like how much profitability they're going to have when there's one cell on the pole or whatever is leased out versus 2 versus 3, but their profitability exponentially increases after the initial build out, right? Because the first one's not profitable, or it's like 8% profitability, and then it goes to like 15, and then goes to like 25 or something like that as they stack these.
So you're saying more profitable poll than over at RCI Holdings?
You want to play polls?
You know.
Gosh.
So and while you're pulling that up, I want to point out. So there's a couple things. I think there's a fundamental difference in investing. Like Crown Castle and DigitalBridge are two very different companies. You could be invested in both, and I wouldn't say it's a vast amount of overlap, because one is, and remember this too, you got to talk your book a little bit. So if a CFO is saying that's hard to do on your own balance sheet, and the CFO works for a company that doesn't do things on their own balance sheet, well, yeah, he's incentivized to say that. But with all that being said, like I like data centers, towers, small cells, investing in that infrastructure, especially with the wave that we're having with in the AI hype has not fully died, I would say.
No.
The bet on DigitalBridge is a bet on how much fundraising can they get. Well, there's actually I don't like saying bet. I feel like that makes it sound too binary but the investment thesis.
Yeah, considerable factor.
Right. The investment thesis is a couple of things. One is people may have misunderstood them because optically they have a crap load of debt because they own so much of Vantage Point and SDC, or Vantage SDC and DataBank. I'm sorry.
Yeah.
That they had to do equity method of accounting with them, which basically means they take the debt from those companies and put it on their own books, even though they have no responsibility to pay that debt. And so one, it just looked terrible optically. Two, there was a bit of a binariness about how much money can these guys raise, because they can raise funds. They're really just pivoting from being a REIT to being a PE firm. So if they're able to raise the funds, this company's going to do very well. And my thought was they're able to raise funds because there's going to be a lot of money trying to flow into this space. And then obviously, are they able to have decent returns? I thought they could in that space. So I thought that data centers are going to become full, things like that.
You have to be able to allocate that capital well, too. Obviously,
sure,
right? You got to raise the capital, but then you have to have really, really, really strong capital allocators in each segment of it, right?
I agree.
So, and that's the thing. One of the things that kind of concerns me about DigitalBridge is that they're super focused on capital raise, which that's the point that they're at right now. And they're continuing to be focused on capital raise. They do go on to say that they're very, very strategic, and they're not just going to spend money to spend money, which I think they're taking a really good approach there. In that space, I feel like it's I don't know. You have to be selective. If you're just spending money to spend money, then you could end up with a whole lot of nothing. But it's gonna be just as much as it is capital raise. It's gonna be like how effective can they be
Sure.
with the deployment of that capital and being disciplined with what they actually disciplined with what they buy, and then buying things that create opportunity for cross-selling between them, right? Which would be like fiber plant, small cell company, something like that. A lot of things that would kind of allow for a lot of cross-selling. What's going on in the comments?
So one
McBootity made a fun reference. Someone, I think it was like Zuni, who said "clown castle" something like that.
Castle.
So someone else besides McBootity.
No, the other
credit is unknown.
but what's happening in the comments is
Taxes.
some people are having debates about taxes. I don't know what the debate is, but it seems to be a very heated debate.
over Roth and a 401k basically being a bad structure or not, roughly. Like, that's poorly worded on my end. I apologize, chat, but
Oh, I'd be interested. Somebody lay it out for me, and I want to look at it.
The only thing I saw
Anyway.
as the example was that Meat Kevin can buy a jet to write off taxes.
Oh,
my guess is what, like, we're talking about, like, your account and you having a company and using the company in a way.
Well, first of all, if you're gonna say like you have more opportunities to take advantage of the tax system if you own a business and have things to write off against this business, sure, I agree with that.
Yeah. My big concern with that, though, is and this, like, I'm not a lawyer, and I am aware that states have very, very different points of emphasis on this, but boop 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 boop
Boop, boop, boop,
boop
boop.
boop boop.
Yeah, listen, tacky aliens.
Alias over taxes. Thanks, Internet Warrior.
So what I'm getting is that Alias
Play
is
nice, guys.
deciding to. So like you can just. I'm guessing if Alias is a tax accountant, he's not going to renew the relationship with Gillett. He's not going to be Gillett's tax accountant. Let me put it that way.
Now, what I would caution people, though, is that, like, assuming that is the rough conceptual framework for taxes, there's a term called piercing the veil or piercing the corporate veil, and it's very important to know that because, like, generally speaking, yes, a corporation should be structured where your finances, your personal finances, are not held in jeopardy for the company. But things such as undercapitalization can be grounds enough for the case to be levied against you, the person, besides the company. And then there are other details as well that vary from state to state. That's as far as I roughly know. There are experts for this. I am not one of them. But it is a topic that I do, like, am aware of and am interested in learning more about from time to time.
I'm just saying because the argument saying IRAs are boring. Didn't he like get his IRA to be worth like?
No, yeah, that's Peter Thiel, though.
$5 billion.
Yeah, you can hold privately held asset, not privately held, but like private equity assets within an IRA. If you set up a self-directed IRA, you can like hold property. I think there's some pretty interesting things you can do with IRAs that, like, a lot of people don't really think of. I don't think they're really useless. I think they're pretty powerful. But
I'm also
and then, like, for my accountants, what, like 72T or 70? Yeah, is it 72T distributions?
That I'm not sure.
You heard of that?
I haven't gotten that far. You're spoiling the book.
All right. Well, you'll have to look up 72T distributions for IRAs, which allows you essentially to access capital before your retirement age at a fixed percentage distributed over time.
Oh, is that where you can get like 5% on or something every year? Something weird like that?
you can take out a set amount, but like
Mhm.
once you sign into the agreement of you're doing a 72T, I think it's a 72T distribution. Once you submit that to the IRS and you sign into that agreement, you have to take that capital out no matter what, right?
Right.
If
It almost
you
turns into like an annuity in a way, like kind of.
yes, but it's pretty much similar. Like the distributions, I guess, could be viewed as an annuity. You forego or you get around the early withdrawal penalty, but then you are taxed on it as ordinary income. But let's say if you like, I don't know, YOLO and retire early or something like that, and you're just wanting access to that capital soon, you know, you're probably going to be in a pretty low tax bracket when you're extracting that capital. But you're locked into it essentially, right? So there's some interesting things that you can do to get around early withdrawal penalties in IRAs.
Oh, the other thing too is like if you're a business owner, I feel like self-directed 401 or company 401ks or SEP IRAs are amazing because it becomes a business expense, and then you get to also save it on your taxes. I don't know. I think you get to double take. But anyways, we don't need to be talking about CCI's more.
So anyway,
catch
so
the Lions game. So.
I keep on getting ads.
Fuhat, no, that's supposed to. You should not be spending. This has to go into your.
Yes, Fuhat.
It has to go into your IRA, Fuhat.
No. Thank you all for the $2 to Jesse's channel.
I'll have to see what the ad settings are. Maybe it got effed up. So anyway, so this is kind of the now how I am interpreting this is that basically the first small cell, like if you're doing a one tenant, your return is about 6 to 7%. And then on the second tenant that you put up on that small cell, your return is 10 to 12%. And then on a third tenant that you put up, your return is about 15%. So if you're in the stage of you're just building out and a lot of your small cells only have one tenant, then you're only getting like a lower return than if you're able to land 2 or 3 tenants on it. And the future return on that second and that third tenant is going to be 2 to 3 times higher than the first tenant. Mm-hmm. So you get into this space where if most of your deployments are only a single tenant, but you have 60,000 in backlog, and you're going to be deploying 2 to 3 tenants on that small cell over the next couple of years, then your actual return on your future tenants is far more than the first tenant, which is kind of just a scaled down way of like a tower,
right? A tenant is like Verizon, AT&T.
So
yeah,
I believe so. I think it would be like Verizon, AT&T, T-Mobile. It also might be the hardware as well. Like, I'm not sure if you would be able to have multiple tenants from one provider if they needed to increase bandwidth. I think you would, right? Like, assuming one small cell, one radio can do X amount of bandwidth. If you're growing that bandwidth, well, you might have one provider putting multiple nodes or multiple tenants potentially on the pole. But yeah, I'd have to look more into that.
Yeah, I was just curious. Like I said, I think this is primarily a response to the comments from the DigitalBridge CFO, correct?
Yeah.
In saying that he and so what you're saying is the issue right now with small cells is there an issue with adaptation at the tenant level, or are you just saying it's just not scaled up? Once it gets scaled, it will inevitably have adaptation at the tenant level. They're just currently building this and scaling it, and that's just the issue. It's in the early stages.
Once you're scaling this to 2-3 tenants, it becomes a lot more profitable from like a unit economic standpoint. It's never going to be as profitable as cell towers, right? But my belief my belief is that if we have a huge adoption of small cell
Mhm.
and like tiny cell, microcell, eventually, which that adoption would be really from trying to offer high bandwidth services, low latency services on the 5G network, right?
Mhm.
Well, if we get to the point where companies are prioritizing small cell deployment, right, and tiny cell deployment, and the breadth of that coverage is really, really good, then you have less capacity requirements from the tower side, right? Because you're offloading that capacity from the tower side to the small cell side. So you potentially get into this point where you're decreasing the capacity need on towers because your small cell deployments are getting to scale, and that's where I think
Hmm.
small cell could essentially reduce demand for tower longer term.
Is small cell, because like here's the other thing with small cell, what's the, like if I build one little small cell tower, what's the range on that?
I think it's around a mile,
What about
right? So this is
tiny?
gonna be like dense areas,
Yeah.
Right.
dense areas in like cities, places that have like high rises, and you're able to put these small cells in like on like poles and stuff like that. So when it comes to like 5G spectrum, you really have like you have your like high band, your mid band, and your low band. Your high band is going to be like low range, high capacity. Your mid band is going to be like decent capacity, mid range, and then your low band is going to be low capacity, long range, right? So as you look at like designing, and T-Mobile had some, I think it's public. Maybe I shouldn't say this.
Whoops.
T-Mobile had like a really good architectural design when it came to 5G of like
Yeah.
5G is not just using high, mid, or low band. It's staggering these bands in a way to provide the most amount of like full coverage at high capacity in certain segments, while limiting the need for like you're not just going to go small cell everywhere. You're not going to go low band everywhere. You're not going to go mid band everywhere. You're going to have use cases within these geographical areas depending on their bandwidth demands and their like, the types of areas that they're in, how far it needs to reach. So like a lot of the rural areas are going to be probably more of a combination of mid band and low band, especially if they don't have a lot of like structures in the way. And you can like shoot that low band out extremely far compared to something if you're doing like a high band small cell deployment. So it's really like nuanced, but also then you have T-Mobile working with like SpaceX and Starlink to launch these satellites that are essentially servicing cell phones on their current frequencies at a cell phone band. So it's like if what we're talking about like long term, like let's say 10, 20 years, if what we're talking about is having some type of low band frequency that can give us really, really good coverage and breadth of range at like low volumes, and then stacking say mid band and high band for those high capacity demands, then like you get to the point where towers become less and less needed, unless they're in, let's say, different economic areas that are trying to just bolster their cell infrastructure, and they might be a couple generations behind of as far as like the tech that's currently available.
Well, here's the thing. I think if you're an asset manager, because you're saying 10 to 20 years, you're not looking out that far. Right?
Probably
Because
not. Yeah.
you're acquired. So this is the fundamental difference between Crown Castle and Digital Bridge. Crown Castle is their own business. They need to build their business out. They need to be focusing on what to do, what's the trend that's going to be coming. Digital Bridge says we need to buy the companies that are doing well in the next 3 to 5 years to give carry and return to our investors in our funds.
Yeah.
So,
Well, but I still think that's small cell though. Like small cell is just in the early stages.
who does
Like
small cell
if you're
outside of-
looking for growth, like
Right.
small cell is going to be growing at probably a 30% clip over the next 5 years.
That's because and to be clear, it's interesting because I think on their last earnings call they said positive things about small cell, didn't they?
And that's what I'm confused, man. Like,
Yeah.
so why in the world is the CFO bearish?
That's the most beautiful dono. Thank you for the fiber, Internet Warrior. I'll read it. I'll read it. Or did you want Jesse to read it, Internet Warrior? Bold of me to presume.
I'm learning from your podcast, but also losing brain cells reading your chat. Chat, behave. Come on, guys.
You know what the funny thing is? Fuhat, actually. Not the one starting fires here.
Oh my gosh. Hey Dan, if you're in the chat, man, feel free to lay the hammer. I think you got admin rights. So I don't know.
Oh, man.
Consensus. Like I feel like we're
think
gonna
it's
leave
fine.
this
I
to a
don't
vote.
think the people that are like being yelled at are like particularly offended. But it's your channel, so.
I don't, man. I don't really care. I'm just.
But
No. But that's kind of what was strange to me as well, man. Was because Digital Bridge in their quarterly calls was really bullish on small cell, and then their CFO is like, "Oh well, towers are just have way better unit economics," and I'm like, "Yeah, that's great if it's needed." Like, I feel like you're missing a big risk here.
because let me see, I'm pulling up the. Let me pull up the transcript because it was the CEO that said the positive things, I think, on small cells.
Are we worried at all about counterparty risk? Just out of curiosity, because we've mentioned just about every big telecom player, correct? And outside of maybe T-Mobile, all of them have pretty nasty looking balance sheets. Or am I just being dumb?
What I would say is that this is probably the space that I would want to play the industry.
Okay.
Even if it wasn't Crown Castle, like it'd be like AMT, Crown Castle, Digital Bridge. It'd be like the like owning the assets with a well managed debt load, and then leasing out the assets to the players, because AT&T and Verizon just look like crap.
No. But what I'm getting at though is don't these or maybe not Digital Bridge per se, but don't a good amount of them get their revenue top line from these debt laden companies?
Absolutely.
Okay.
But even though there's risk there, what's gonna happen if Verizon goes BK?
Yeah.
Or AT&T goes BK, or T-Mobile just doesn't exist. These are it's getting to the point where this is must have utilities, right? And no matter somebody's going to have to own that infrastructure and provide that service.
Yeah.
It could very well be if there was a collapse in the industry, I can almost guarantee you that they would get bailed out.
All right. Yeah. Again, no, this is just odds are, if this were an issue to show its head, probably wouldn't show up for I don't know how many years, but
yeah, it just seems like
time in the future.
I'm kind of scanning through the transcripts on some of these things. From Digital Bridge. And Chief Operating Officer at Digital Bridge. So then the COO was also on. He didn't say a ton about small. I had to actually listen to the full, or reread the whole thing.
I listened to it because I still listen to their conference call or their quarterly calls, and I feel like they were we're seeing a lot of essentially tailwinds and interest in small cell. It was kind of they were reaffirming what CCI has been kind of harping on of guys, this is where everything's going to be going. Like,
Yeah.
this is in the cell industry, at least, this is where the growth is going to be.
Well,
Um,
and part of it too is they're saying, so it's interesting because they're saying it's we're going to continue to build as well, like it remains a place where you can apply capital. Because the COO is saying it's a build relative to buy. Balance sheet. So he's also saying something about the balance sheet. I think so. This is like this might be the way that you can kind of reconcile them both. It kind of makes sense because it actually makes sense now as I'm thinking through this. You're saying small cells will do well. However, there's a ramp that's currently happening. And they're kind of saying, like the COO basically said, you're going to have to like basically on your balance sheet be able to fund this for a while. And then when it takes off, it'll do well.
Yeah.
And so I think that's where they're saying the pain's coming from.
Uh-oh. Did anyone hear
that the static? Yeah.
Yeah.
Is it me?
I don't think it's me. I don't know. Hold on.
Oh, it might be me. I had something just turn on, like my
Okay.
my air just turned on, so maybe that's it.
Okay.
I'm gonna go mute for a sec. Let me know if it goes away.
Mana. Do. I don't hear it. Like, I muted myself also. Oh well. Anyways, neither here nor there. Show must go on.
All right. Sorry if it's me. It might be me. I muted and it went away. So just wait until my basement dwelling gets warmed up and then it should go away. So no, but they are totally right. You know, it's going to be capital intensive on the build.
Mm-hmm.
And I think that's where a lot of risk and potentially a lot of moat comes in, right? Because if you're late to this, right, you're going to have to spend that capital eventually. If that's the driver and that's how this plays out, then we're going to see continued investment in small cell for like years and years and years and years and years.
Sure.
And the carriers that are going to be looking for these assets to lease, you might be getting into a position where you only have like 2 players.
Oh, duopoly.
Yeah.
Yeah. I mean,
which is like interesting because I haven't heard AMT talk a lot about it. Like American Tower, they seem like, oh yeah, small cell, that's kind of like a little side thing, but we're not really focused on it. Whereas like CCI is like balls on the walls, like putting all of their chips in that basket.
So we have a tower that's not American, Crown Castle that is bullish small cell, and a digital bridge that is still trying to show people their PE and not a REIT. Am I forgetting anyone else?
That's in small cells?
That's in this space.
American
There's
Tower.
tons in this space.
Yeah.
There's a ton. You want to look at a company that's been absolutely wrecked, like what's Lumen?
Oh, okay.
Right? Like, how do you do? This is what happens when you're in infrastructure and you don't manage your capital well, your debt load well. Like, you get wrecked.
Sad. And that right there is opportunity for Crown Castle, Digital Bridge, and American Tower.
Exactly. Right. Exactly. Right. You you wait until these guys are basically BK or they go BK, and then you buy up their assets for pennies on the dollar. Right.
Or they're having to fire sale them so they don't go BK.
Was Lumen in a YouTube hype stock, or
was it?
I don't know if it was or wasn't.
It was going around the YouTubers for a little bit, I think.
Yeah, like it didn't have the traction like a Palantir or SoFi, but it seemed like I thought I saw it around, but I can't remember who.
So I do got to get run here. I'm actually gonna be there's a call I have set up about to go over a certain company's accounts receivables
Oh,
and
I
discuss
think I
that.
know.
But I think I get it from both perspectives. If you can now, Crown Castle is big, and I think they'll come out fine. But I understand kind of the hesitancy to say, let's jump as a PE firm, saying let's jump. Like, how do I explain this? They don't want to. They want their fund, their LPs, to be happy with their immediate return and keep
Yeah.
their funding with them.
Yeah.
Also, I just got an ad for Sphere. Just want to put that out there. But
Sphere.
Did you actually enter that sentiment trade?
I have not yet.
Okay, all right. I was gonna say.
I'm going. I have to go to Vegas for a conference at the end of February,
Okay.
and so I'm like, oh, someone's like, oh, you got to stop by the Sphere. I'm like, I'm sure I will.
I hope you take a selfie while there's like spheres on emote mode or emoji mode.
I will.
That would be that would be
I'll have someone take a picture of me.
Yeah, no, I agree. I think like there's going to be, I don't know, it's going to be really good potential opportunity. I think the tailwinds for the tech are going to be there. It's just like what company can manage the like financial aspects of it well enough to actually return a good amount of capital to shareholders. And if they can do that, they might be able to return a lot to shareholders. Because I don't know, the discount that's being given to CCI, and remember, like CCI still, like the bulk of their revenue still comes from towers, right? They're still like a major tower player in the US at least. But it's an interesting proposition. Like I think you are totally right. Their debt load, whoever is building this out, their debt load's going to increase probably a lot as they do the infrastructure build out. And what you want them to avoid is overextending.
Right.
I'm hoping, not hoping, what I think is going to happen, especially with Elliott Capital or Elliott Management coming in and trying to get a new CEO. Most likely what we'll see, what I would like to see is them to take their current small cell infrastructure, really work on getting those second and third tenants, proving out a profitability structure within that specific area, and then like they have a very, very good base to go off of, and they can pretty much ramp from there, having more proven financial like ability within the space. But yeah, it might take a little bit. So the hopefully, I mean, 60,000 nodes, I think they're going to double or triple their small cell capacity in like 3 years. So but they probably will. I think 2024 is still going to be hard for them. They still have the sprint runoff. It's still going to be tough.
Yeah. Although, well, I don't know. Maybe it's priced in. Maybe it's not. I thought at this point maybe priced in.
Yeah.
But
that's the other hard part. Like what's priced in and how far out is this priced, right?
Although the more like I'm in the markets, the more things that I think are fairly obvious and priced in aren't. And so sometimes I'm like it might be that they were probably next thing, yeah, the sprint stuff's rolling off, then it tanks, and it's like, oh well, we already knew that was happening. Buy it.
Yeah.
I've seen that happen several times where like a stock sold off on something and someone's like, why it's off? And I was like, this thing that was already out there?
Yeah.
And
yeah, it's funny.
So
just buy the bottom. It's that easy.
Right? Yeah, it's as simple as that.
So basically out of this conversation, we have learned that I know nothing. And
no, I think what we learned is that small cells, there's an upfront investment right now because you basically, I won't say economies of scale, but like you said, you want to have several tenants on it, and you need a network. Like if the radius is 1 mile, I'm assuming what you need is enough in a dense enough area for people to actually want to hop on and use them.
Yeah.
Like I'm assuming the transition between like small cells and larger towers is going to be really, it might be clunky in a sense. And so you want someone to be able to be, so until you get that set up, it might be a little bit rough on your income statement and balance sheet. But as long as you get through that, it's probably going to do very well for you. Because, we always say this, it's like, isn't 5G fast enough? I feel like it's so fast. But the second you get 4G or whatever we're on now, but like the second you get that hit of that faster internet, you won't go back. You won't want to go back.
Yeah. You're like, oh man, I need that.
People are like 1080p. That's for peasants.
And I think there's going to be a lot more use cases for like IoT devices that are going to be more like, I mean, we see it with cars and stuff already, right? Like, cars having 5G service and whatnot. It's probably just going to increase.
Yeah.
This also is the framework for full self-drive.
Yep.
We've gone full circle. We've gone full circle.
Bullish Tesla, right?
I think the number one thing I'm taking away is I reach out is that if you make anything below 300K, you're in a low-paying job.
Oh dear God.
Yeah.
Oh dear God.
Which, by the way,
what is this a reference to?
Let's see, 300K top. I think that's like right outside the top 1% in the U.S.
It's like, what is that in reference to? I feel like there's a reference here that I'm missing.
That's just the comment in chat. If you
okay. Oh, thanks, chat.
Anything below 300K is low paying. God, man.
Well, I am destitute. Beyond destitute.
I am destitute.
I am destitute.
I am so destitute that you are wasting your time with me. Other people, maybe not so much, but... And you know what? I may be destitute, but I'm all right. I like to think I do okay for myself.
I'm just trying to see, and it's also relative to where you live, like in the U.S. I'm sure.
Oh yeah. Because, like, it's money talk, but like conceptually, if you're on the younger side, like it makes sense that you'd focus on your personal income statements top line. But as you get older, like that burn rate is a reasonable thing to focus on, and having a holistic approach is all right enough. But then again, that's some fire talk right there, and I'm not necessarily all about that fire life.
Hey man, I'd love to have enough money to not really have to worry about anything, but it doesn't mean I'd not do anything with my life.
Yeah, I mean, like, if you look at human history, it's interesting.
I think that's the concept of financial independence. The whole like, I can get on board with the FI part. Oh, you guys talked crowd already. Did you guys?
Did we talk crowd?
No, we didn't. We didn't even talk about.
Yeah,
crowd,
I was gonna say. Yeah, you have a call. Oh wait,
is
this a part 2?
Sorry, Ricky, you're gonna have to wait. All right,
up for
so we're
part 2.
talking crowd. No, were you gonna talk, dude? I'm like so back and forth. I think I'm just gonna hold.
We can talk crowd. Do you want to just have a chat on crowd?
Yeah, dude.
A quick chat.
It's like the best problem you can have, I think, in terms of a stock. But I'm like, bro, look at that chart. I mean,
it's like Nvidia, but
okay,
like.
So here's my question.
Yeah.
100% they're gonna have a profitable gap Q1. That's 4 quarters straight of profitability.
Yes.
Yeah.
0% chance they're not in the next S&P inclusion.
What are the parameters for
really
S&P again?
People really like this catalyst. I've been noticing.
Well, dude, it works. Like the largest index in the world, it's 4 straight quarters of gap profitability. You have to be over is either 10 or 14 billion in market cap, and you have to be US based.
Okay, so yeah, they'd meet it.
But and I mean, they would be. I checked. They'd be like number right around 110 on that list, like by market, because then it's sorted by market cap, right?
Yeah. But I just, dude, I don't know, man.
Dan's like, imagine if it wasn't profitable next quarter. I'd be like,
They're like, guys,
they're
Talk
like,
about some
Bob bought a
earnings
jet.
management.
no, because George Kurtz was on like, I mean, I'm pretty sure I have to go back and double check the interview, but he literally said on an interview, we will have our fourth straight quarter of profitability next quarter of GAAP profitability.
Just imagine the earnings management right there if something serious were to happen.
It's like an inverse Palantir. Where
Yeah.
Palantir does everything to make, like with the accountants, it's like make sure we're
Yeah.
GAAP profitable. And then these guys are like, nah, we just wanted to not be.
Oh man.
So this would be 131. And we're looking at, estimates are 11 cents
Yeah. So wait, if
11
if this is-
cents.
per share.
if S&P 500
It's-
inclusion is the thing that really matters, then like just screen Lamau, like am I just banging rocks here for no good reason?
Okay, so is this Tesla then?
And then
Is
the
this-
counter.
Okay.
Is this going through a Tesla?
Yeah, and then my counter to myself would also be: is there a way to short companies that are on the bottom section of the S&P 500, and therefore S&P disinclusion or exclusion is a catalyst to short?
Well, that'd be an interesting. You should do. You're still at school, right? Do a paper on that. Do a research paper. That'd be actually really fun to look at. Here's the thing that I struggle with.
Mhm.
Okay. I bought Crowd at obviously in retrospect a very good price.
Yeah.
I'm now holding an asset that I bought at a good price that I don't know if I want to say it's a generational company, but I think if you're in the SP 500, you're by default a generational company. But like, it's an extremely good company. What I need to do now is like, do I want to say I can take these profits and reinvest it better than having my money in CrowdStrike right now? Do I believe that? Or do I think that CrowdStrike is going, like if I held it for a long period, be able to continue to have like its reinvestment runway grow essentially? Because one of the things that's been interesting about CrowdStrike is this is very rare. As its revenues grow, its reinvestment runway has grown, which is like a wild concept. So like basically, you have a TAM, and as you take up more of that TAM, your TAM shrinks. This is a company that they have a TAM that's been expanding as they grow, because cyber has been, and now it's not exclusive to CrowdStrike, but they're the ones that are eating up the best, because they have the dual tailwinds of just cyber growing, but then also people are moving to cloud. They're cloud native, they're endpoint security.
Yep.
The problem is, it's like I look at the valuation, I'm like, dude, I would never buy this right now. Like I wouldn't be buying it. So
it really is like, it's hard, man, because it goes to that kind of that philosophy of like, you want to let your tail outliers win for you.
Right.
You know what I mean?
Exactly.
And it's like, but at what time are you like, okay, it's winning too much?
Well, and here's the thing is, it's like, basically at this point, at this valuation and at this market cap, I'm saying, I mean, I don't have to say this, but like, I'm basically asking, is this the next Tesla, Microsoft, Apple, Google?
Or is it the next Symantec?
Right. Exactly.
McAfee.
And so I'm kind of like banging my head, like, well, what's the best? And like I said, it's a good problem to have, but it's a problem.
Yeah.
And so, and it's tough because like you could say, well, just take that money and reinvest into like the next, maybe cybersecurity player you like. And I'm like, they're all expensive too, dude.
All right.
Yeah.
Market cap is for this one is what, like 68 bill?
70 billion, something. Yeah.
Yeah. All right. So if we're gonna put it with the greatest of the greats, we're talking a $1 trillion company. Yeah. Market cap, thereabouts, roughly.
Sure. Yeah. Well, that's my question. Is like,
and then assuming no buybacks or dilutions, one way or the other, like just net neutral on that.
Sure.
What stock price would that imply as far as the runway going forward?
I mean, that's
a lot.
4,161.
Yeah.
But that's like you said, the long term. It's like the whole concept of like let your winners run.
I still think like
because I have cut winners early before.
Yeah.
Now I think
it sucks because you're never going to do it perfect, and you're never going to be right. Like,
No,
like you can be right and you can be wrong. Like you'll be wrong. It's just
and that is why I love halvesies as a concept, because it's like the ugliest compromise, the dumbest looking thing ever.
Halvesies is how you hate yourself no matter what happens.
Yes.
Oh, you sell half.
Yeah.
And you hate yourself if it goes up, and you hate yourself if it goes down.
And I didn't originate halvesies. I heard it from Meb Faber before. So.
I think one of the things too.
It sucks because if there was a company that you're like, this is an obvious buy and I need to raise capital, then I feel like it might be easier, right? To decide if you want to sell it or not.
Okay, guys. Most important part of the stream right now. Sit. Get the dogs.
Doggo.
The dog cam.
Doggo.
Tilly, sit.
Woof, 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 woof.
Dog. Can we
Jeez,
see the dog?
just flexing the man cave right here, Andrew.
Right?
And the doggo.
Look, this is a shared office.
I'm working on mine. I've actually been working on the basement a bit this weekend, so moving stuff around.
I'm just chilling with Honk Goose.
Okay. Now back.
Okay, so for them to theoretically get to that type of like a crazy valuation, we'll say, like they become the next Microsoft, they get to like, or not the next Microsoft, but they get to like $1 trillion valuation, right? What would be a fair multiple that you'd see the market applying for them to get there? Because I'm thinking about like
30,
like a 30. I was thinking that a 30 multiple on a free cash flow basis.
Right.
Is what I was thinking.
Yeah, that's what I would say too.
So on a 30 multiple on a free cash flow basis, they would have to grow their free cash flow to about 33 billion.
Yes.
And their cash flow right now is at about 864 million.
But we all know margin improvement is something that seems like it's going to be happening pretty quickly.
Well, so margin, but I agree, margin on the bottom line, but margin on the free cash flow line. I feel like free cash flow, they already have fairly good margins on a free cash flow basis.
I want to say, because aren't they around 30 right now?
They're right around 30% on a free cash flow basis.
They gave guidance on their long-term free cash flow yield. Let me just check.
Yeah, gross is kind of flatlining at around 74%. They're at 30. I feel like they could get up to 40.
So you want to hear a crazy stat, by the way, while I'm looking this up? I want to say they're number 2 or 3 fastest company ever to hit 3 billion in sales. Are they number 1? They're like, dude, like, because this company, they were founded in, I think, 2011.
Yeah. Not publicly traded until 2017 or something like that.
Yeah.
That's insane, man.
Like, let me see if I find their long-term free cash flow targets. Let's see. Gross margins. And I have another chart that I can show you that kind of makes me think, well, it's like, so yeah, they're at like, what, 30 right now in free cash flow? Their target is between 34 and 38.
Okay. Yeah. So you get a little bit of margin expansion.
Yeah.
Is that like a 5-year target? Is it like 3-year target? Do you know?
I want to say it's 5 to 10 years, but I don't know off the top of my head.
Yeah. Yeah, man. I don't know. It's so hard.
Oh, also George Kurtz sold 10% of his shares.
Oh yeah.
Oh, yeah, that's right. That's right.
Yeah,
that's
the CEO sold 10%, which is pretty insane.
Yeah.
And the membrane.
Well, especially because so here's the interesting thing is because he's super wealthy already, right? So he's worth like almost $5 billion. His holding, I think he's got 1% or 2% of CrowdStrike. So he's got somewhere between 600 million and 1.2 billion in CrowdStrike. if my understanding is correct. So, depending on what he's saying is, this is the part of my personal net worth I want to make liquid cash.
Yeah.
It's not like, because like it'd be one thing if it was like this is his entire net worth, and so he needs liquidity for something, you know.
Yeah. No, and like there is something to say about like structuring your not your exit, but the rebalancing of your like assets if you're one of these owners.
Right.
Because I mean, something similar kind of happened with Shutterstock, because that guy owns so much of the company that he's just slowly been selling off, and I'm like, he's selling, but like he owns a massive amount still. And yeah, if I was him, I probably wouldn't want my $1 billion or so completely in one company, like completely in this company, especially when you're no longer the CEO, you're just the founder.
God forbid divorce happens. Oof. Forced liquidator.
Oof.
Well,
Big
you know,
oof.
the Paylocity founder is that dynamic for Paylocity stock too.
Yeah. So it's not, I don't see it as being a super big red flag, honestly. I like something to like watch out for, especially if he continues selling 10% stakes regularly. That's like, okay, he's scaling out of his position like a ton. That would concern me a little bit more. If it happened like 2-3 times, you're like,
Yeah. I mean, like, you don't know, maybe he needed to fund, you know, his next F1 car. Who knows?
Yeah. Maybe.
But
you notice that he's a racing fanatic? I noticed that too.
Oh yeah, dude. That's like, I would say if you're invested in this company, you don't know that he's a racing fanatic. Like, come on.
Yeah.
Okay, so let me ask you this then. At what price would you buy it?
Okay.
No, because like I feel like that's
today's fundamentals, right?
That's a big question, right?
Like today's fundamentals.
Yeah.
Like no fundamental deterioration. Where would I say? And we're saying today's S&P 500 as a, and like, so basically all the stocks today, I could just say at all of a sudden CrowdStrike fell to this and I'm buying it.
Yeah.
I just want to say before I answer that question, I was pounding the table on this back in like January. Buying this company at above a 3% cash flow yield was insane. And like I was pounding the table at the time, so I just want to give myself. But
really was.
I would say no fundamental deterioration. Let me just do a little.
Just like randomly tabula rasa. Clean slate.
What is, hold on.
What is love? Baby don't hurt.
Time. 180.
180.
I might be being too conservative on this, but I think 180 is what I'd probably do.
Yeah. I don't know, man. I just like, there's so many tailwinds in this industry that like, I mean, this could break highs and trend.
Dude, someone who's not an idiot is buying it right now. like that's the other thing I'm thinking. It's like there's someone who's not like, there's people on Wall Street who are like, are they at all-time highs too? All-time highs?
Crowd?
No,
almost so.
They're right off. But like here, so you got a really solid company at a really solid price. Like at some point, it's like, unless this was an abnormal amount of your portfolio where you're like, I don't feel comfortable, then I don't know, man. Like, and obviously not financial advice if we are not financial advisors, but man, like
just
from a portfolio, from a portfolio management perspective, like if you still think this is like a decade tailwind, like let that sucker ride. I think
that's kind of honestly, that's kind of the place I landed this weekend as I was like reviewing it. Also talking to what did Gil call pharma? Big pharma dumbass. But big pharma shill. But he and I were having like serious conversations about this because I think he holds CrowdStrike as well. And I was just going back and forth and we're kind of saying like, I think I'm just gonna hold it. Like part of me wants to sell because I'm looking at the valuation. The other part of me says, you know what? I got this company so cheap. Yeah, maybe there becomes a pullback in my instead of having an annualized return of like 150%, it'll be something kind of, rational. But also my question is, do I think from here this stock will outperform, let's say 15%?
See, that's hard, man.
That's hard.
That's
it's
hard.
It's within the realm of
then you're
possibility,
like,
at least, I think.
Yeah.
Or am I wrong?
Right.
I mean,
And
anything
for
can happen.
anyone asking,
Yeah,
the question for me is not, am I buying? The question is, am I holding? Because I bought way before where we're at today.
Yeah. That's hard. And what we've learned from this is that you have these and hate yourself either way.
Yes. That is always what you do.
I am nothing if not a glutton for self-punishment. So that's why I find halvesies intriguing. I own up to it.
Yeah,
because honestly, like this would be one that I would be potentially interested in buying, right? At the right price. Obviously, nowhere near it is where it is right now, but it's like, if my goal is try to accumulate assets that I think have a really good 5+ year outlook, especially in a sector that has a really good long-term outlook. After you accumulate, like at some point, it's like,
Andrew,
you bought it, like buckle up and just see what happens.
You have access to the dark arts
and I'll say
astrology.
And I'll also say that this is fundamentally different, I think, than like if you're buying a value play. So like Fabio sold Musa. I still hold Musa because I think like for me the return's still fine. And I just thought I didn't feel the need to sell it. But I understand because like that one, when it runs, it's like, well, now it's a gas station company. It's not, it's fundamentally very different than who's this?
I don't know. Somebody's calling out in the chat.
Oh man, this is the guys I can rotate into. They look like they're doing really well.
I mean, to be fair, fairness to them though, it looks like they're a really small company. Yeah.
No, are they small?
Small. Yeah.
Like actually, let's see.
3.
Oh, they're founded 2021. Oh, so maybe they were a spin-off of something?
Could be. I haven't even done any digging, so I apologize to whomever. Like I don't know enough. There's no way I can give a coherent answer anytime soon. But
information delivery services with a software as a platform, it offers eFax corporate digital cloud fax technology. Bro.
Fax it in the cloud, bro.
Wait, what does that mean? So like, is it like scanning?
Yeah, it's called an email.
Again, I don't even know what they do, so I can't comment. But then again, there's a company called PagerDuty out there, so.
I mean, they have a net income yield of 19%.
That's not bad.
Yeah, I was gonna say for that, assuming that the space is where it is, like.
Okay, I need to look at these guys because there's got to be more like.
Oh, they're using healthcare, so they probably have something that's
Are they
packaged that oh my gosh, abides by HIPAA regulations.
I was gonna say it's more secure.
And they probably have some type of, I don't know, something that abides by HIPAA that they're able to sell.
Yeah, like their front page of their investor relations, it's like healthcare's $300 billion.
Oh, okay. Yeah, they are. Good old HIPAA.
Man, operating cash flow really dove though. Net income really dove too.
Well, were they a spin-off? That's what I'm wondering. their spinoff, I probably want to see who spun them off and where they're at with that. And if,
Kind of been declining, or they might have done some type of restructuring or something like that in 2023 or in this gap, because that's a huge decline.
hold on.
They
Yeah,
spun off
J2
what
Global
was
would rename upon completion of this. It spun off. It was a spin-off from J2 Global in 21.
it? Okay, 21. All right.
Okay, that would in 21.
Yeah. Do you know what Q for 21? I'm gonna look.
No.
October 7th, effective after the market closed. Yeah, October 7th, 21. So it shouldn't
It's
have.
been a spin-off, someone, not gonna lie.
Yeah, because if it dropped by that much from like it's one thing to be like pro forma and then massive drop, but it's another thing entirely to have a year in between.
Yep. I don't know. Have to know a lot more about the business and the spinoff and their specific situation.
Yeah.
It's intriguing though. Like,
So
yeah, I mean, it's something I would probably look into a little bit, maybe. But
intrigued. Color me
I'm
intrigued.
guessing
Thank
it's a super low market cap, probably super high risk. Market cap 387 million.
Yeah.
Oh my god.
I mean, if this is true, it's saying that it's trading at 4x NTM normalized earnings. It's a it's a 20% free cash flow yield.
I know. Which is dumb, right? What's their
the
free
short
cash
interest
flow?
on this?
Ooh.
Short interest 3.2%. It's not very, but it is a small market cap. So I wonder if that's
net income last year was 77 mil. Operating income was 151. EBIT's 101. Free cash flow is 68. I mean, it's definitely trading really cheap.
Oh yeah, and they're loaded up with debt.
Oh, are they?
Yeah.
Yeah, I'm trying to get the balance sheet. Beat me to it.
Long-term debt, 800 million.
All right, so then it really becomes, how can they service that debt? Are they going to just be debt laden and screwed over?
Yeah.
Well, because whenever someone spins off a company, my first thought is
usually,
what does the debt look like?
Yeah, same here.
I wonder if that's
okay.
At least they've been on the upper bound of the cash pile for the balance sheet, for what that's worth. As far as like recent quarterlies goes.
The question is, when do they need to renegotiate that debt? That could be asking about servicing it.
And what the heck? Why is it like I'm not seeing any debt? I might just not be pulling it, but I don't see any type of debt repayment.
I pulled it on Ticker, so they had 800.
I know. So the balance sheet shows the debt, but I don't see any type of debt repayment. I would think I would see some type of debt repayment in their cash flows.
Let me see cash from investing.
Yeah, they have maybe screwing me.
Ticker's also saying they're not repaying any debt.
So it might be a bad data pull.
Yeah,
I have to go and look at the
SEC. Good old Edgar. I love Edgar.
Yeah. All right. I am gonna hop off now, though, guys.
Anyway,
hop on another call.
We're gonna wrap it, guys. Hope you guys enjoyed, and hope you're staying warm out there because it's cold.
And I was gonna originally hop off for the Lions game, but they did win. So
yep, they did.
They did.
Yeah, they did. I think their next game is actually easier. I guess they're gonna play the winner of Bucks and Eagles.
Nice.
Yep. Thank you all for having me.
All right. Yeah. Thank you for hopping on, Bacon and Andrew. It's fun as always. And we'll see you guys in the next one.
All right. You boys have a good one.